Hey guys, welcome back. Today is the day. Today is when we get the US CPI data. Okay, so be prepared today to see what the markets are gonna do. Are they gonna go down, or are they gonna shoot, shoot, keep going up, 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 up? Okay, let's go. Okay, what does the CPI data mean for the financial markets? Okay. The US the US March CPI data was in line with expectation, with the headline data pointing to a further cool down in inflation, printing at 5% from 6% in February. Okay. So they're not printing as much money, okay, as they were in February, okay. However, the core CPI, excluding energy and food, remained sticky at 5.6% a year over year, okay. The US stock markets did not cheer for the sharp decline in inflation. Why? The consumer price was widely expected to fall in a larger portion from a year ago as the base figure of energy price surged in March of 2022 when Ukraine just had just started um, just started the WTI futures soared to above $130 per barrel versus $83 a barrel now. Okay, but all other items in the CPI basket did not show much of a decline, particularly in food and shelter. Hence, this is not just war induced structural inflation, it is the economic issue that the world is facing in a post pandemic era. Inflation will not go down to the US Fed's target level without an economic recession. Perhaps, perhaps that's why the Fed members forecast a possible recession later this year, uh, within what we which could be possibly triggered by the recent regional bank crisis. So, what does this imply to the broad markets? Okay, let's moving on here. The last bull before the crash. Okay, so talking about stock markets, it is so far so good with three US benchmark indices all in the green year to date, I should say, not the year to year, this year to date. The tech heavily weighted Nasdaq is particularly strong, up 14% this year. But don't forget that it is also the hardest beaten index in 2022 during the most aggressive rate hike cycle, as these sectors, or so-called growth stocks, are the most sensitive to interest rates. Now that the pace of the rate hikes are slowing down, the Fed is expected to pause or even cut rates in the second half of this year. The policy optimism may continue to support the upside movements in the broad stock markets. However, the bull market may end when the Fed starts cutting rates, but it sees a materialized economic recession. Will this be later this year? Let the time tell. Okay, I'm gonna show you another piece of information about inflation. Uh, okay, okay. So the inflation, right, for the CPI, slows to 5% in March, a nearly 2-year low, but core consumer price gains accelerate. Okay, so what does that mean? It means inflation for the ninth straight month in March admit drops in both gasoline and grocery price. Okay, so the prices are coming down. Okay, while the federal, uh, yeah, yes, I'll play this. Actually, I'll play this now, guys, so you can listen to it. Okay, let me go to.
Groceries. And so when I look at, so I mean, sometimes it's even like leading to unhealthier habits because, like, okay, I can go get like a $5 meal at Wendy's, which isn't healthy, but that's cheaper than buying the ingredients to make a meal at home. And so I would say that's the place where I'm feeling it the most.
In particular, our senior population was really being affected by those double digit inflation numbers. And even still today, when eggs started to skyrocket, meat's gone up tremendously, a gallon of milk, you know, staple products that our seniors needed, they were really being affected by the inflation and still are. When it comes to those that are going through our Fresh Mobile, we're also seeing families that we haven't seen, that we didn't even see during COVID, but now we're seeing them because while they survived COVID, now they're seeing, $3 a gallon gas. Again, it's the cost of just keeping the staples on the table that is, I believe, driving people to look for their local food pantry, come to the mobile distribution sites.
So, you guys, food and everything, gasoline, it's all going up. You know what I mean? Okay, but it says here, but an underlying inflation measures that better reflects long-term trends accelerated on another surge in rent. Consumer prices increased 5% from a year earlier, down to 6% in February, and a 40-year high of 9.1% last June, according to the Labour Department Consumer Prices. Okay, let's go here. So, what is the difference between core CPI and overall CPI? But core prices, which exclude volatile food and energy items and capture long lasting trends, increased 0.4% from February, following a 0.5% bump in the previous month. That pushed up the annual increase from 5.5 to 5.6% overall. The report underscores that good inflation is letting up somewhat as pandemic-induced supply chain snails resolve, commodity prices fall, but the pullback is painfully slow and playing out in fits and starts. Barclays expects annual inflation to drop to 3.3% by the end of the year, above its prior 2.9% forecast. Okay, guys. So, what does CPI mean? It means either they're gonna increase the rates today, America. Um, uh, the they're gonna increase the rates, or they're gonna lower the rates. CPI. Okay. So if they higher the rates, then the markets are going to suffer because the markets will start coming down. But if they lower the rates, guys, if they lower the rates, that's a good sign for the stock markets and the markets all around, because the lower the prices, um, the more the stock markets are gonna pump into the system, like crypto stocks, they're all gonna go up. We just have to wait and see later today what what time. Uh, Let me check and see what time it's supposed to come out. It's supposed to come out early in the morning, uh, about 11 a.m. You, New York, New York time, guys. So